Welcome back. Now, venture capital is booming in Southern Africa. In 2024, the market recorded 13.3 billion rands in active investments across 1,325 deals, with tech and healthcare leading the way. And joining me as we unpack the survey is Stephan Lamprecht from VS Nova. Stephan, thanks so much for your time this afternoon. Now, I think, the economic conditions, I think of the economic conditions, and last year we had tons of elections, so that fueling some sort of uncertainty. Economic growth prospects were also downbeat. So talk to me about what drove the level of investment, the record level of investments in the market.
Hi, good afternoon, and thank you for the opportunity. Yes, I think what stands out for me is that really when you look at the startup economy in South Africa, and that being driven by entrepreneurs that are looking at the services and products needed to drive the economy, that seems to be divorced from all these political realities and the challenges facing the economy. I think when you're an entrepreneur and you've got a new opportunity in sight, you've got an idea that you would like to pursue, then all those other things are peripheral to what you would like to do. And hence, as a result of that, building on that momentum that we've seen, even during, the previous 10 years when we've had some dire challenges to the economy, facing the economy, these entrepreneurs will just carrying on. And that momentum are we seeing at the moment really translating into opportunities. And what's happening is the investors are following suit because, they were looking for opportunities to diversify investments. They're looking for opportunities to really back the future economy, and that you're seeing in the numbers.
So I guess then the growth that we're seeing is sustainable, considering that these startups are addressing needs.
Absolutely. I think, essentially, and I think you're right to the point. I mean, if you invest, it's not just, we're not talking about a government grant. We're not talking about somebody handing out money with no expectation to get it back. And government is a key role player in the sector where government does get involved. There's still a social return required, so it can't just be dishing out money. And as a result of that, for these entrepreneurs then to be successful, they have to address needs. It's got to be rooted in a market opportunity. What stands out to me on that one as well is that, a lot of times when we have these conversations, then would-be entrepreneurs would say, but just give us money. If we had more money, we'd be able to do all these exciting things. But the biggest challenge facing our entrepreneurs is access to market. I can have all the money in the world, but if I can't sell that product and I can't get it into the market or convince, you and me to change our behavior and try these new products, then it's not going to change. So market access is a key challenge.
Market access, visibility. Talk to me about the level we are seeing the funding trickling in. When you think of investors, particularly institutional investors, Stephan, they'd rather throw capital in established businesses with proven track records. But what are we seeing when it comes to early growth capital, pre-seed or seed capital funding?
So, I mean, essentially, when you say pre-seed and seed, we're talking about people that have got an idea, so there's not yet a business. There's not turnover. And that's typically the domain of government, and where you see government grants getting in to really help people to establish a prototype or get it off the ground. There are a number of early stage investors. I'm thinking, for example, if you think about E-squared and some of those really, foundational interventions to bootstrap and kick, activity into this sector, that's where we'd find seed. But the majority of investors, you're absolutely correct. They've got, opportunities in other sectors where they can move large amounts of money very easily without the overhead involved in supporting entrepreneurs and do it without the risk. So that capital that we're seeing flowing into the venture capital space is around very specialized entities, investors that have got a passion for this industry, and increasingly seeing a lot of those investors really tapping into local corporate, but also increasingly international opportunities to get these foreign investors also to give us an opportunity to expand globally.
And talk about expanding globally, is our regulatory environment conducive then to get these foreign investors to invest in some of the startups?
Yeah, absolutely. I mean, that's one of the key constraints in South Africa. We talk about the elements like, for example, exchange control. We've got an onerous intellectual property regime when it comes to getting approvals to take intellectual property offshore. Mm-hmm. And that adds what we would call friction, meaning that for the entrepreneur, there are now additional areas of expertise they need to develop in order to overcome and address that kind of regulatory regime.
Yeah.
So that is a challenge. It's not fundamentally impossible. And that's at the heart of the definition of an entrepreneur, is to find a way where, a lot of us would just simply say this is too difficult. So you can do it. But if we really want to play in, at our strengths and really help our entrepreneurs and create more capital flows into South Africa, we've got to make it easier for them to overcome those kind of, regulatory constraints.
Yeah, and the survey notes that most of the capital flows are going into the tech sector. Is fintech rather still leading the way on that front? And what about Agritech, right? An important industry when considering global trends and innovation needed to deal with, I guess, climate change and issues around food security in the continent.
Yeah, absolutely. I think, firstly, fintech is very much still the dominant force, especially in the last 3 or 4 or 5 years. And that makes sense if you think that, we've got such a well-established financial services sector. Therefore, it goes to, to expectation that there would be a lot of startups focusing on fintechs and payments, etc. But you're absolutely right. And this is one part that is very exciting in South Africa. When you combine technology with agriculture, we're talking about food security, but increasingly we're talking about information.
Yeah.
And you're seeing a lot of uptake in that space. Last year, because of the size of the deals, Agritech was actually, in the top 3 this year. It's not for lack of investment, but some of the other sectors this year attracted, or subsectors of ICT attracted a little bit more attention. But you're right. I mean, Agritech is very, very key to innovation, and it's because it's around the application. You mentioned also, climate change. Getting data, being able to really, work at the micro level of understanding what's happening in the agricultural sector. Also payment platforms and trade platforms, exciting businesses around that, where people are able to bring their products, into the market at a lower cost, having the visibility around trends and market conditions, which, was not here in the past really an option to do that. So that's nice. And that brings us back to your original point, which is it looks after the needs. It's got to fill those needs in order to have that sustainability.
And before I let you go, just quickly talk to me about, the contributions to deals by the type of fund manager, right? So independent funds leading the way. What's been interesting is the resurgence of the angel investor, right?
Yeah, absolutely. I mean, and why we're seeing a lot more awareness of angel investors is not, I don't think they've been absent or there's been less deals, because, that is your first stop. I mean, if you're not able to fund your idea yourself, who do you go to? You start speaking to family, you start speaking to friends. Maybe you've got somebody that's, been, very successful in corporate South Africa. And that's where angel investment comes in. But because it's not a regulated environment, we wouldn't know about those deals. And the reason why this year it featured a lot stronger is because of the co-investments. So a lot of our established fund managers are telling us about, deals that they've done, that they've had angel 1, 2, or 3 part of that deal right from the beginning. So a critical part of our economy, a critical part of investment, not just here, but, internationally. And you're seeing that resurgence, and I'm quite excited about that, because the more participants, remember, it's not just about the money. So a lot of times those angels have got, specific experience. They like you mentioned Agritech, maybe they've done it before. They understand the market, how to do it differently. And that's what our entrepreneurs need, is that hand-holding and the mentoring of people that's done it before.
Stephan, thanks so much for your time and just unpacking those findings for us this afternoon. That was Stephan Lamprecht from VS Nova.